Gold is at a historic high. And question is now time to sell or is now time to buy? What is smart money doing? What are the big guys doing? And what are the little guys doing? All of these are fascinating questions, which we're going to get answered today by one of my favorite gold people, Dana Samuelson, who Dana and I have worked together for years and years, and has been a terrific friend and a supplier for me of precious metals. And just super glad to have Dana Samuelson on our show today from Amergold. Dana, welcome to the Wealth Ability Show.
Thanks, Tom. Thanks for having me. It's great to see you again. I appreciate your having me on today.
All right. So first of all, give us a little of your background, how you got into the precious metals market, what your role is in it. And then we'll talk about, okay, so what's going on?
Well, very briefly, I got out of college in 1980 with a German degree, which was
Highly marketable.
Yeah, it made me unhireable at the time, just like almost any college degree in 2009 or 2021. But the precious metals markets had hit record highs at that point in time due to rampant inflation in the U.S., high interest rates, economic crisis. And my brother had been in the business for 5 years, and he got me a job working in a vault because I could be trusted counting, shipping, and weighing in 1980. So I literally started, if it was a restaurant, at the kitchen sink washing the dishes. And I got a lucky break after about a year and a half. Jim Blanchard, who owned the largest precious metals mail order coin company in the country at the time, offered me a job as a coin grading trainee, a numismatist. And Jim was the man most responsible for the private re-legalization of gold ownership in 1974. Gold was illegal to own from 1933 to 1974 in the US. And I went to work for Jim and I did well with him. I became his buyer. I became a senior buyer by the mid to late 80s. I was spending 50 million bucks of Jim's money with the industry. So I got to know all the players. And I finally had enough experience and gumption to start my own company in 1998. This is our 27th year in business, about to be 28. And we've got an impeccable national track record for honesty, fairness, sound advice. We're consultative in nature. We just try and help people in our sector and, decipher what's the best value in the market today, what products might be best for you, what's happening in the market. So it's all I know. I've literally painted myself into a golden corner. It's all I'm really good at. And just ask my wife, and she'll remind me and you.
That's awesome. All right, so gold's over 4,000. As we're sitting here today, it's 4,200. By the time we release this, it could be at 4,500. It wasn't that long ago. It was at 2,000. Okay, I mean, you may know how long ago. How long's it been since it was at 2,000?
At the beginning of 2024, gold was still under $2,100 an ounce. And
so it's doubled since 2024.
Correct.
Beginning of 2024. So in 2 years.
Yes.
Less than 2 years, it's doubled. Why?
Well, a couple of different things. First of all,
we haven't doubled. I mean, the prices haven't doubled. So it can't just be inflation.
Right. No, it's not inflation. It's just a record amount of buying that's been going on. So it's the most fundamental equation, supply and demand. More demand than there is available supply has driven the price higher. And it started primarily following the great financial crisis with central banks becoming net buyers after they'd been net sellers from 1950 to 2010, dishoarding gold. They decided after the debt explosion of the great financial crisis to begin buying gold in earnest. And they did that for 10 years. And then Russia invaded the Ukraine and we sanctioned Russia. We weaponized the dollar, and central bank gold buying, especially among the BRICS countries, doubled from 500 tons a year to 1,000 tons a year. And now that is becoming material because they're consuming not just about an eighth or a seventh of the annual mining production. They're getting about a quarter to a third of the annual mining production.
Wow.
And cumulatively, it's starting to add up. And that's what caused gold to break out and start moving higher in 2024, cumulative gold buying. And it's not a U.S.-centric phenomenon because there's been no fear in the U.S. markets, which is really what's driven the three previous big bull markets, late 70s, 2008, 9, 10, and then again when COVID hit in 2020. So this has been a global phenomenon. And then when President Trump was elected and threw a monkey wrench into the global trade order with his tariffs, that's caused a couple of really frenzied buying surges in 2025 that have helped to spur the price up sharply higher still. The first one came in April when the reciprocal tariffs were announced, and then a week later they were pulled back on everyone except for China, because China stood toe to toe with us. And we ratcheted up tariffs on China to 145%. Well, they went on a gold buying spree at that point in time. They drove the price from a little under 3,000 to almost 3,500 in a month and a half on their own buying. Because if you're a Chinese investor, what do you have? You have stocks, or you have real estate to invest in, and both have done badly since COVID, or you have precious metals. And now we're their biggest customer. We're telling them basically, we don't want your products at 145% tariffs. So they went on a buying spree. And then another buying spree occurred in August and September when we tariffed India 50% over their continuing to buy oil from Russia due to their supporting the Ukrainian war against Russia, supporting the Ukrainian war against Russia. And India helped to drive gold and silver sharply higher in September through a lot of buying. And then the whole world kind of caught on when we broke over 3,700 and we ran to 43.50. That caused the world to really take notice. And that's when U.S. investors really started to get on board in earnest, who've been mostly sellers into this rally from 2,200 to 3,700.
So what I keep hearing is it's instability of the dollar that's causing the gold rally. Because the first thing I heard you say was it was the weaponization of the dollar against Russia. And then it was tariffs and how would that affect trade with the dollar. And so all of these things, we're really talking about, and yet the dollar, at its, its value hasn't actually gone down. It's like at 97, I think right now. It was up to 105, 106, but that's not that huge of a swing. It's pretty close to parity anyway, but it's the instability. This is what I keep hearing is that, okay, so we're looking for instability in the world, and the dollar is what's caused the world's stability from an economic standpoint. And now when we upset the stability of the dollar, how much do you think did the downgrade of the Treasury bills, Treasury bonds go? How much did that affect it?
Some. There's been, we've been worried about our debt in the country. People in the gold community for years, and people like you who are responsible financial individuals, of course. But it really hasn't hit mainstream until this year, where our debt is really starting to matter. Now we're up to 38 trillion, and we're adding 2 to 3 trillion a year now. And the debt interest is now went from 500 billion to over $1 trillion just on the interest payment. So we're getting into a debt trap, and this is the year that it really kind of mattered. The dollar is down about 10% against other currencies this year since the beginning of the year, and that's helped to buoy gold a bit. But it's more of kind of a fundamental distrust of the dollar internationally.
Right, because the question is, it's cash flow, right? Where is cash flowing? And if cash has, for the last 50 years, it's flowed heavily into the dollar, right? That's where the cash has flowed. That was the stable currency. But if the dollar isn't stable, then it flows into gold because that's the one stable international currency.
Right. Gold has become the world's second reserve currency to the dollar again after it was it fell out of favor, since Bretton Woods in 1945 all the way to 2025, excuse me. Right.
Wow. So
it's a big deal.
So we'll get to where it's going. But let's look at some of its relationship to other things. For example, let's start with the stock market. Is there any kind of relationship that you see between the stock market and the price of gold?
Typically not a direct correlation. Now that gold's kind of gotten mainstream in the last 6 months because of the run we've had, we're seeing a bit more of a correlation because it's been accepted by mainstream investors in the US more than it has been previously. Like Bitcoin is kind of correlated to the NASDAQ now. So we're seeing a little bit of that, but traditionally that has not been the case. Usually, when the equities markets in the US or around the world are doing well, that means the economies of the world are doing well. And that doesn't give gold much of a bid. Gold tends to be bought really heavily when there's economic fear. And that's the one thing that's been lacking in this big gold rally over the last years is a lack of fear in the US market. But there's been fear around the world of what the US is doing, which is driving, people in Asia, in Europe to buy gold at higher rates on top of central bank buying, which has been going on for 15 years now.
So you're not suggesting the instability of our administration has anything to do with this?
Well, I really respect what President Trump is trying to do to deal with our debt and our deficits because it's an intractable problem. We have to deal with it or it's going to get worse. And he's the only president with any gumption to even try it. But I don't like the knee-jerk deployment of how this has gone. They call it diplomacy for a reason. And, when you're not sure what the next Truth Social post will actually be, it's a bit unnerving. And we're seeing that in the gold market.
Yeah. So a lot of it's uncertainty. How does that, so let's talk about tariffs for a second. There's been a lot of uncertainty in the tariffs. I mean, it wasn't like, April came around, we did reciprocal tariffs and then it just, okay, everything's going to be that's it, right? No, I mean, it's gone up and down and up and down and up and down. Is it the up and down movement that impacts the price of gold, or is it the fact of the tariffs?
Well, I think it's all about the uncertainty of what's going to happen next. So I've got friends who are small business owners that are importers, and they don't know what they're going to pay for products. One man I met at a conference in July, imports pepper. But his customer's Walmart. He needs a lot of pepper. He just doesn't know how much he's going to pay. So that's kind of slowed down the business cycle a little bit. Plus, we've put some of the people that want to sell from other countries into the US, we've put them off by raising tariffs on them. So they're looking for other avenues. For example, China, we buy about 20% of what China makes compared to the whole world. We're their biggest customer at 20%. They're still getting that market share, only they're not getting all of it from us now. They're selling elsewhere. And that's part of it. So it's just the uncertainty over what might come next, because you never know how President Trump is going to react. When a politician in Ottawa put out a video he didn't like, the next day he said, we're going to tariff Canada, 10%. Now, Canada and Mexico are our two biggest trading partners. We have to get along with these people, right? And you have to do it diplomatically behind closed doors, negotiate these things. And, don't make it a big sensational headline that makes everybody go, what is going on?
So a lot of it, again, is that instability.
Yes.
Now, historically, I mean, you and I, you go to a lot more than I do, but you and I both been, the gold conferences and the gold bugs. And historically, gold's been more thought of as a hedge against inflation. And yet inflation is at 3%, and yet gold has doubled. So it's obviously way more than that. And given that, do you see, let's say that whether it's this administration or the next, there was some stability in the world, would that bring gold prices back down? Or would people just hold on to it? Or do you think or do you think there's a plateau and then it just goes up from there and then up and down from there? Do you think it could go back down to 2000?
Oh, I don't think we'll see $2,000 gold again, but gold is a reactive metal. It's pushed by other external factors because it is just a rock. It just lays there, right? And it's really how many dollars or yen or yuan does it take to buy it? It's a loss of purchasing power of fiat currencies as we measure it. Really, that's what it is. So let's look at what happened during the great financial crisis. Gold started that run at about $700, $750, ran all the way to almost $1,900 for 3 years. And then once the world's economies got some traction and some stability returned, it corrected back down to about $1,200 an ounce for 6 years. So we can see gold correct if we get back to a more kumbaya world where we have global trade that's working well, where you don't have a war or two wars disaffecting bigger parts of the population. Right? We had, don't forget about Israel and Iran going at it earlier this year. That was a contributing factor as well. So if there's global harmony, there's less worry, there's less need for gold. But we're in a bifurcated world now, and we're in a reflationary environment. And by that, I mean not inflation, reflation, where the US is going to bring manufacturing that we've farmed out to the rest of the world back home. We're going to create a duplicate manufacturing system to one that already exists in the world. And we're going to have a higher cost basis here in the US. That's what I mean by reflationary. And when you say inflation's only 3%, well, that's officially measured government statistics. Right. Cumulatively over the last 4 years, it's more like 25%. And that's really part of where the rubber is hitting the road here now.
Well, do you think gold was underpriced before? Because it's doubled, but say prices have gone up 25%. That says to me that gold was perhaps undervalued before or underpriced.
Possibly. It's really hard to say in the moment. I do think gold is usually pretty fairly priced, depending on what's happening in the world. But we've just got a brand new development that's been announced just this week, which is the BRICS nations have been working on a bunch of components to build a currency of their own called the unit. And they just announced this week that it's going to be backed 40% by gold. And the other 60% will be by the participating BRICS nations' currencies. So almost 50% of the unit's trading value will be backed by gold, which is a big, big development. And China has been a huge gold consumer for years. They import gold. We know about how much they're importing, but they also mine gold, and none of it leaves the country. It's a one-way street, so we don't know how much gold China has. The U.S. is supposed to have about 8,300 tons between Fort Knox and the Fed in New York, and I think it's probably there. If it's not there, we got a much bigger problem than most people realize. But it's rumored, China has about 2,400 tons on record, but it's rumored they've got 12,500 to 25,000 tons of gold. Wow. They'll tell us what they have when they want us to really know what it is.
Interesting. So how important are small investors in gold prices? Are they important at all? I mean, like they actually play a role in, say, a Bitcoin, but do they really play a role in something like this, or is this all the big players? It's the banks and the sovereign nations that are driving the price.
Yeah, that's most of what's been happening over the last 2 years. Now, the smaller investors tend to come in later in the cycle when the cycle gets pretty hot. Fear of missing out kicks in, or just plain fear. Now, if we get into an economic downturn in the U.S., if we have a need for substantially lower interest rates because of a much weaker economy, not just President Trump bringing in potentially Kevin Hassett and making him Fed chair, who was going to lower rates anyway. But if we have a real problem and rates really go down, or God forbid, we go back to more printing like QE, that's when gold really takes off. That's when the typical small investor really jumps on the bandwagon. And they are material, and more so than just at the margins, but it's usually later in the cycle.
Interesting.
Right? So we've seen smaller investors around the world participating in this, but not in the U.S.
Got it. So you talk about, confidence in the economy, et cetera. What happens with AI? Our mutual friend, Andy Tanner, I've been talking to him a lot lately, and he's very bullish on the stock market right now. He goes, because he sees AI is going to drive so many jobs out of the market, and there's going to be so much unemployment. Will that affect the price of gold?
Potentially, if it dominoes enough into the employment sector where consumer spending drops, and then the Fed has to react by lowering rates. Lower rates are good for gold because gold doesn't produce a yield or a return other than appreciation or depreciation in value. So if you get a dividend or a return on an interest rate that's above the inflation rate, a positive yield, that's good for gold. I think Andy's right. The AI will make companies, and especially the bigger companies, have lower costs. But if the caveat to that is higher unemployment, it may not be that great for the economy in the long run. So it just depends on where the balance is. And I think we're already starting to see some of that in the employment numbers. The ADP just came out with their latest job report. We lost 32,000 jobs in November, but some of those were in information, which is a sector where AI can replace humans.
Right.
Right. So we're seeing that, but in bigger companies, I think, are more able to handle adoption of AI. But another bigger issue was small business lost 120,000 jobs in November, according to ADP, which is big. Small business is about half of the of the U.S. economic engine, as you know. A lot of your clients, I would assume, are small business owners. So that's a bit troubling. And I don't think AI is really impacting small businesses that much yet. It'll happen.
Yeah, it's interesting. So let's say that we got to a 20% unemployment rate.
Ooh.
Okay, let's go all the way there. Okay, what if? Okay,
Yeah.
we got to a 20% unemployment rate, which is what we had during the Great Depression, right? How would that impact the price of gold?
It would push gold substantially higher because the Fed would really be forced to react to supplement for the loss of economic activity. And we would get what Lawrence Lepard would call the big print, where what the Fed's already done might look like chump change compared to what they could do to supplement the U.S. economy. And the Fed is actually the backstop to the global economy as well, as you know. So if we have to really support the whole world, if the U.S. kind of goes, or the whole world starts to go down that weakening phase, I mean, 20% unemployment is huge. That's a crisis. So
Well, it is, and yet the challenge that I see is that AI is happening so fast. It's changing so fast. We've had big changes in technology over the last couple hundred years, but we've never had them this fast.
Right.
And so people have been able to retool, re-educate, they can get a different job in a different sector, but that may not be able to happen with AI. So while it may not be a permanent fluctuation, it certainly could be a huge, a temporary fluctuation that could have this huge impact. Let me go the other direction. What would have to happen for gold to come down significantly?
We'd have to have global harmony. We'd have to have the world really working together. No war, a good global economy, good trade between countries.
Okay, so we're good owning gold right now.
Yeah, yeah. I mean we were there in 2018.
Okay.
Right, before the first Trump tariffs really started to fracture how the global trade worked. We had just-in-time inventories. Everything was humming just about as perfectly as it could. And then we've seen some slow fractures, COVID, and now more so, especially kind of the East versus West that we have going on now. That's not going to change anytime soon. These bigger trends that are in place are entrenched, and they're going to go on for a while before any big changes come that might bring us back towards a more harmonic global environment.
So how long, where do you see gold going? I mean, I know that, there are some people calling it to go way high. But then there have been people calling it for 20 years. So, the gold bugs do, right?
Yeah.
But I always found you to be a little more measured in your approach, and would really like to hear where you think this is going the next year to 5 years.
Well, I try and be realistic. Thank you. And I also try not to look too far over the horizon because you just don't know what's going to happen. If you go too far out in time, things change. But I've thought about it a lot. And this feels to me like the late 70s before we got into the real crisis of 1979. So to me, this feels like 1977, 78. And I lived it. I was in college. I wasn't in the markets at the time, but my brother was in the business, so we talked about it. So if we are in like 1978 in a kind of a rebound where we had a 10-year cycle of inflation in the US and disruption that's become a 30-year cycle, which is what I really think we're in right now from 2000, 2030, 35. I think we're about halfway to where the ultimate gold top will be at 4,000, 4,200. I think we could see 8,000, $8,500 gold if we get into a real economic crisis that's globally affected. Absent that, I think we'll still go higher, 4,500, 5,000, 5,500, more measured, because the trends are in place to do that. But if we get a real hiccup economically or geopolitically along the way, we could see that accelerate quite a bit.
Interesting. Um, Gold, it's just so interesting. I watch gold in part because I have a bunch of it, but in part just because I think it's so fascinating, because I think there's so much you can learn about the world just by watching the price of gold, and how the world's looking at the US and how the world's looking at the dollar and how's the world looking at its own stability. Um, what kind of advice are you giving people right now? I mean, is this like you're bullish on it? This is something, hey, this is something we ought to, you ought to, ought to have this, or is this just, okay, just remember it's a part of, it's just safe assets in your portfolio. It's not your primary asset.
Yeah, I try to be measured, like I said, but I've never been more bullish than I am right now. I really think we have the potential to see, a double from
Interesting.
here if things really kind of go sideways, which the trend is heading kind of that way. Now, it's in our best interest to get along with China, but they're going to continue to challenge us globally. And they're the real challenge, where the real challenge is going to be. They're a manufacturing and shipping powerhouse, and they exceed our capacity to do those things in by multiples right now. They've been working on that for 10 years and we haven't. Um, so I think some of the trends are in place where we will see this continue to go. And like I said, I don't like to be too far over my skis because they'll always come back to haunt you. And I
Right.
want credibility with the people who listen to me. So I do think we're going to go higher, and part of me is worried that, we could get a double because of bad things happening. Yeah.
Wow. Really interesting. So, so your company is American Gold Exchange, right? How do people find you?
We are a national physical precious metals and vintage coin dealer mail order company. We're in Austin, Texas. Our website is amergold.com. We deal in the most widely traded, competitively priced, easily sellable precious metals bullion products. We stay in the main road. We try and do what's best for our clients, and we're consultative in nature. So if people have questions, we're happy to answer any and all of them to try and help people, because really our clients are our best asset. If we help people, we get more business from referrals and repeat business. And trust is really big in our industry. So we try and engender trust by being honest and helping people.
Yeah, I want to talk about that to finish up, Dana. Thank you for that. There have been some instances fairly recently where people have bought gold and discovered it was just gold plated.
Right.
Okay. How do you, how does the average investor deal with that? I mean, outside of having a trustworthy gold provider, how do you know?
Well, we do have a problem. It's modest and growing with Chinese counterfeits. They're
Right.
replicating whatever they can, like they've been doing with Gucci bags and Rolex watches for decades. They got into the metals business about 10 years ago. So I'm a past president of the Professional Numismatists Guild, which is the leading organization of rare coin dealers in the country. I conceived of and helped to establish the industry anti-counterfeiting task force in 2016. And we got the US Mint to change the design on their gold eagle to incorporate into the picture that's stamped on the coin minute design elements that make it much harder for the Chinese to replicate. And other mints around the world have been doing the same thing: the Canadian Mint, the Austrian Mint, the British Royal Mint. So if you deal with sovereign minted 1 ounce gold coins that have these very intricate designs, and you deal with a reputable dealer who has a good supply chain and good testing equipment, you're going to avoid 99% of the problems. The real problems come in gold bars, which are tungsten plated with gold that have much plainer designs on them that are much more readily replicable by the Chinese. So that's why I really recommend you stay with the sovereign minted 1 ounce gold coins made by the US, Canada, Austria, and Great Britain. That's enough choices for most people because the Chinese can't replicate well some of the tiny little design elements that are on these coins. And they'll fool you, but they won't fool a professional dealer like me. Plus, these things have a harmonic sound. When they touch each other, they make a little ding. And we know what that sounds like. You handle a lot of this stuff, you get good at it.
So I got one last question for you. So I remember a number of years ago being on stage and somebody saying, well, the way gold's too hard to transport, so you got to have diamonds. And lo and behold, 10 years later, we have lab-grown diamonds. Do you see lab-grown gold coming? We can grow diamonds. Why can't we grow gold?
Well, diamonds are a function of, crushing coal, right? And I'm not sure how they make the lab-made ones, but gold is an element that is, theoretically from outer space that came into our planet from an asteroid, millions and millions and millions of years ago.
Had to have been created somehow.
Yeah, or perhaps, as Robert Kiyosaki likes to call it, it's God's, God's money, right? So God made it as part of the planet's creation. I don't think we're going to be able to do that alchemy, which has been one of the things that man's been trying to do
for thousands of years.
Yeah. Yeah. So unless we can get under the seabeds and mine precious metals under the ocean floor, we're going to have a much tighter supply going forward. That's really the only place where there might be more findable, but it's going to be hard and expensive to get it.
Interesting. All right. So we've been with Dana Samuelson with American Gold Exchange, amergold.com, learning about gold. Why is gold important? Well, we need to have something safe in our portfolio so that the world falls apart, whatever, we lose our job, whatever, we've got something to hang on to. And to me, that's how I see gold. Gold's a store of value. That's what it is. The fact that it's doubled gets people excited. Probably the first time in my lifetime that people have actually been excited about gold as a general population, which scares me a little bit when people get excited about something, right? It says, well, maybe it's time to sell. But then we hear not just you, but everybody I'm talking to thinks it's going to continue to go up. So really fascinating. Thank you so much, Dana. Thanks for what you do. Having reliable advisors like you is critical in spaces where we're not the expert. We can't, like you said, we can be fooled in gold. You can't be fooled in gold. So whether it's gold, any other commodity like oil, the same thing. You have to have a trusted person in that role. And when you do have that trusted person, you're always going to make way more money and pay way less tax. We'll see you next time on the Wealthability Show. Thanks for listening to the Wealthability Show. If today's episode gave you a new perspective, remember this: the tax law is not your enemy. It's a roadmap. And when you know how to follow it, you can build real, lasting wealth. If you're a business owner or investor who's tired of overpaying taxes, the Wealthability Accelerator is your next step. You'll have the opportunity to work directly with me for 80% less than my standard rate. And I'll personally guide you through how to change your facts so that you can change your tax. Go to wealthability.com/bonus and apply today. Remember, it's not just what you make, it's what you keep.
This podcast is a presentation of Rich Dad Media Network.